The amount of money flowing into Bitcoin from the spot Bitcoin ETFs is incredible. The Bitcoin supply shock is wild, and all of these factors are contributing to Bitcoin's upward price movement. This week, Bitcoin's market cap jumps to $1.4 trillion, surpassing silver. Bitcoin jumped to a record high on Monday, fueled by continued positive momentums of the spot ETFs. And big players are still buying Bitcoin at these new all-time highs. Earlier this week, MicroStrategy adds 12,000 more Bitcoin to its stash. And again, just the other day, MicroStrategy plans second convertible debt offering this month to buy more Bitcoin. All while other big players are selling stock. US billionaires sell $11 billion in stock. What are Jeff Bezos, Mark Zuckerberg, Jamie Dimon up to? Is a financial disaster looming? Billionaire CEOs like Bezos, Zuckerberg, Jamie Dimon, and the Walton family are selling off massive amounts of their own stocks. And analysts think the CEOs may be bracing for an economic downturn, he said, adding, an overheated stock market continues to climb to new heights as investors feed that frenzy out of fear of missing out. Economic insiders are unloading billions of dollars worth of stocks. Could it be that they are dumping stock to buy Bitcoin? Or something on the horizon that could cause both the stock and crypto markets to fall? Should we be worried? Let me know what you think in the comments below. Either way, on the channel, we have been closely following Bitcoin's trend using the moneyline indicator, which we can get for a few more weeks at a 75% discount using the link below. And as we can see here, we are still extremely bullish. The Bitcoin bull run is in full force, while the United States and the US dollar continue to edge closer and closer to what some believe may be a bankruptcy. Tesla CEO Elon Musk sounds alarm on US bankruptcy risk, says overspending must stop. What caused it? If you've been watching the channel, you know what caused it: the private central bank. In our generation, it was more specifically the United States' third private central bank called the Federal Reserve. And if you want to learn more about it, check out this video guide by clicking on the link above. Here's the deal. The situation in the United States with the US dollar is getting pretty dire. And just to try to put things into perspective, check this out. It took 63% of all personal income taxes in February to pay the interest on the debt. No roads, no military, no schools, no social security, just interest. This is an amazing number to watch in the next few years. Individual income taxes are about half of the government's revenue. For February, the US government collected $120 billion from individual income taxes. They had to spend $76 billion in February to pay interest on the nation debt. We are not that far off from a day when 100% of individual income taxes are going to be required to pay for interest on the debt. Every household in the USA is paying for the interest on the debt, not the actual debt, just interest payments. Your share is $280,000, and it's costing your family $600 to $700 per month to service the national debt. Your share of the interest payments will reach $1,000 per month in a few years. This is the path to hyperinflation. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. In this video, we are going to explore the relationship between US debt, interest, and treasury bonds, how we got into this mess, and other things we need to know as crypto investors. Let's hit it. Please be sure to check out our sponsors, Morales Money, CoinLedger, and Tangent Wallet. Know when to buy, sell, and hold crypto with the Moneyline tool we've been using for the past several months now to monitor bullish and bearish trends in the market, as well as find altcoin gems before they pump with Morales Money, which is a whopping 75% off for a limited time using the link below. Get your crypto taxes done quickly and easily in 3 simple steps with CoinLedger, a platform we can use for free to see an overview of our gains and losses, as well as download the tax forms we need to file ourselves, upload to TurboTax, or hand off to our accountant, like Lorenzo CPA, my accountant you can book a free call with in the links below, and invest in your very own cold storage hardware wallet like Tangent Wallet. It's the size of a credit card, multi-currency, multi-chain. It's by far the easiest crypto wallet to set up and use on the market right now. It's extremely affordable, and they've got this clean white edition available for a limited time. So scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. Here's the deal. There's a lot going on. There's so much we could get into in a lot of detail, and we have together on the channel over the past several years. So if you're new to crypto, traditional finance, the banking system, etc., we are going to cut to the chase and make things very simple. So let's explore how money and debt works in the United States, which is ultimately how we got into the situation we are in today. There are 2 key players in this rigged game: the US Treasury Department and the Federal Reserve. They are 2 separate entities, where the US Treasury Department is a government entity and the Federal Reserve is a private central bank that is not part of the government and, interestingly enough, is exempt from all taxation except property taxes. It cannot be audited, and it cannot be indicted by anyone. Weird, right? In fact, here's a video of former chairman of the Federal Reserve, Alan Greenspan, explaining how it's a private entity that doesn't answer to any government authority.
What is the proper relationship? What should be the proper relationship between a chairman of the Fed and a president of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or the Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter.
Interesting, right? So the government describes the Federal Reserve's primary responsibility as keeping the economy stable by managing the supply of money in circulation, and the U.S. Treasury's primary responsibility as managing all of the money going into and out of the government. And although what these two entities do, and their relationship between each other, seems elusive, which is by design, it's actually very simple. When the U.S. government needs money for Social Security, money for defense, to pay government workers, for infrastructure, schools, pensions, Medicare, Medicaid, welfare, anything, the U.S. Treasury Department issues Treasury bonds. And Treasury bonds are just debt. It's a financial instrument that anyone or any entity can buy from the U.S. Treasury Department, and in return, the U.S. Treasury Department pays them in interest. So obviously, when someone buys a Treasury bond, they are using U.S. dollars, and those U.S. dollars go to the U.S. Treasury Department, and then they use that money to pay for all the things we mentioned, like Social Security, defense, etc. And the main buyer of this debt is the Federal Reserve. So basically, over 63% of our income taxes are being used by the U.S. Treasury Department to pay interest on the debt issued by them to the Federal Reserve. In fact, the U.S. government now spends more on interest on all this debt than it does on national defense. And like we discussed earlier, we are literally just paying interest. We aren't even scratching the surface of the actual principal debt. Interest only, it's a racket. So to sum it up simply, basically, the government creates bonds, debt. The private bank gives the US government US dollars. It creates out of thin air. It literally just adds another zero to their database, in which the US government, us, via taxes, pay back with interest. It's really that simple. So why isn't this widely known? Why isn't this common knowledge? Well, check out another clip of former chairman of the Federal Reserve, Alan Greenspan, explaining Greenspeak.
So what, you come up with Greenspeak?
Otherwise known as Fed speak.
What is it?
It's a language of purposeful obfuscation to avoid certain questions coming up which you know you can't answer, and saying, I will not answer, or basically no comment is in fact an answer. So you end up with, when, say, a congressman asks you a question, and you don't want to say no comment or I won't answer or something like that. So I proceed with 4 or 5 sentences which get increasingly obscure. The congressman thinks I answered the question and goes on to the next one.
Crazy. And now that we know the simple, straightforward deal of the government creating debt out of thin air, the private bank buying the debt with US dollars it created out of thin air, and the government paying the private bank interest, check out Greenspeak in action in this clip of current Fed Chair Jerome Powell from literally last week in the Fed's semi-annual congressional testimony, where, just as Greenspan described, a congressperson asked him a question he didn't want to answer.
In 2008, there has been a very aggressive printing of U.S. dollars up until today, and it particularly went on hyperdrive during that 22-month period of COVID. So my question is, which comes first? Congress spending more, and so you respond by printing more money, or are they separate considerations?
I think it's hard to get my mind around that question. We don't print money to fund the deficit. That's not what happens. But when the government borrows, it issues, basically the government borrows to fund deficits is what happens.
Right. And so that's, so that would indicate to me that you do respond, because we, in spending, in deficit spending, are creating a demand to borrow, and you're responding by.
Well, we're not making loans, though. You know, we're not We're not lending money to the government. We're not financing these deficits.
And so there's no chicken and the egg relationship?
There's not really, no. I'd have to think about this. I got to think about the way the plumbing. Why don't we continue this?
Yeah, I'd love to. And your thoughts earlier about fiscal sustainability and how we can work with you.
Yeah, no, man. Sure, semantics. They don't print money to fund the deficit. The Fed isn't lending to the government. The government creates a bond, and the private bank creates money to buy the bond, and then the government pays them interest. This non-government private central bank that we don't know who owns or controls it, except when it was first created, the meeting about it was organized by JP Morgan, who was catching a lot of heat from being too big and powerful of a bank without checks and balances. So he wanted the illusion of being checked and balanced by an entity that sounds like it's part of the government when it's actually just a scam. It creates money from nothing, charges all of us interest on it, can't be audited, can't be indicted, doesn't have to pay any taxes for the most part. But you know who can be audited, indicted, and has to pay a lot of taxes? Us. So let's make sure we are receiving our fair share of our own income back from the government this tax season and get our crypto taxes done in 3 easy steps with CoinLedger. Here's how it works. First, we are going to import our transaction activities from all exchanges and wallets we've been using like Coinbase, Kraken, MetaMask, Tangent Wallet, or similar with a simple click of a button. Second, CoinLedger will automatically classify our transaction history into the appropriate tax treatment, calculating our gains and losses for all transactions, whether it's from trading, staking, NFTs, or anything else. Then finally, the third step. Once we've reviewed everything, we can download our tax report with a simple click of a button. And before even paying to download the tax report, we can view our capital gains and income for free, identify tax loss harvesting opportunities across our portfolio for free, and get help from their support team to review our data if we need any guidance. So we can use the platform for free, and we only have to pay if we want to download our digital asset tax reports, which comes with a 14-day money-back guarantee. And we get the tax forms we need instantly to file ourselves, upload to TurboTax, H&R Block, or similar, or hand off to an accountant like I do with my CPA, Lorenzo. Straightforward, easy, safe, and stress-free. So scroll down and use the link below to access CoinLedger's correct and official site, as well as redeem any special offers they have for us. Awesome. So if you would like to increase your chances of making gains by buying and selling altcoins at the right time using the money line, check out this video. If you would like to learn the best proven strategy in crypto, which is how to DCA or dollar cost average into the crypto markets, check out this video. And to get your crypto taxes done with CoinLedger, click on the link on the screen. Like and subscribe for more. Be safe out there.